understand what is unlisted shares all about. Unlisted shares is also called as pre-IPO. As the name rightly says, aptly it refers to something that even before a share comes into the IPO market, it would be traded in a market which is before the IPO market. And that's the very reason it is called as a pre-IPO market. And in pre-IPO markets, you would find the shares being traded. So largely, if you look at it, where does this shares come into pre-IPO market? This just a minute. Let me just mute. Yeah, thank you. So where does this come into pre-IPO market? It comes from the promoters themselves. So what promoters do is the promoters offload a large chunk of shares across, and these a large chunk of shares which is passed on to the market comes into the market eventually. Most often it goes to large institutional buyers who would have bought this, or also private equity players who would also be the sellers to this. So private equity players or promoters themselves would offload into it. Eventually, these private equity players probably would have given out to some large other institutional investors, or it could also be because of some other retail investors who's been holding and who's selling it back in the market. So these are typically how it comes in. Sometimes, very rarely, it also comes from banks as well to the market. So, but largely, these are the three avenues where it gets into the retail market, and these people, in turn, it will be traded even before the IPO market happens. Now, how does the price determined in an IPO, which is on a listed entity? If you look at it, the price is determined by pure demand and supply, right? Wherein whatever is the price that is traded on the share market, that depending on how many people are buying and selling in that particular market would determine the price of it. Similarly, in the unlisted market as well, the same thing happens. That it's also a demand and supply, but the market here is not the same standard share market like the NSE BSE. Here it is something called as an unlisted market, or it is also an unregulated market is what it is referred to as. But the difference is that like a real estate, here the price is a negotiated price. So it depends on the seller and the buyer, whatever the price is that finalized between these two people, and that will become the final price across. Supposing, let's say there's a share A which is being bought and sold, and the seller says that I would like to sell it for 1,500 rupees, and the buyer says, no, I don't want to buy it at 1,500, but I'm willing to buy it at 1,300. This becomes the marked price. So there is a market again for this. So there are unlisted trading community, and like people like us will help investors to buy and sell these kind of shares. Now, why should someone really buy unlisted shares is the common question which comes up. So why? The first and foremost reason, if you were to look at it, it is because the growth potential on unlisted market is very, very high, because generally the price discovery still not happened. So because in the listed market, what you would see is that the company is already known to people. They would have already seen the prices, the balance sheets are published, all of that, the price discovery happens. So here in an unlisted market, generally it trades on a slightly lower level than onto the actual book value of the market. So that's how, but of course, not all shares get traded lower than the book value. Sometimes it also gets higher than the book value sometimes, but we need to be careful on picking up which one we pick up. So this is generally the biggest advantage for somebody who's coming in even before the IPO. Second thing is there is no allotment hassle for these people to buy this. Because if you look at it, if somebody goes in for an unlisted market, when somebody goes for an IPO, he has to wait for the allotment. If he gets the allotment, well and good. If he doesn't get the allotment, then he'll have to wait for it. So here, that's not the case. So here, the moment that is available, I can straight away go and buy this particular share from the market. So I don't have to wait for the allotment. So this is the two biggest advantages of unlisted market, and that's the reason why people buy unlisted shares. How does the trade actually happen? So let me give you a little bit of a brief on that. So let's assume there is a seller, and then there will be intermediary, which is wealthy, and there is the buyer, so which is your client. So if your client wants a share, let's assume that share is of let's say HDB Financials. And if the client wants a HDB Financials, he approaches the intermediary like us, and from us we will go and figure out who has got HDB Financial shares in the market. So let's assume this client wants to buy 100 shares of HDB Financial. So if he wants to buy 100 shares, so we will go and figure out who in the market is willing to sell 100 shares in the market and at what price. So now we will, let's assume that there will be somebody who will be selling at 900 rupees, somebody would be selling at 950 rupees, somebody would be selling at 1000 rupees. So there will be some, like what happens in a real-time share market. Similarly, there is sellers who would have different offerings. We will go and figure out who's the best person whom we can buy it from. Sometimes what happens is this guy who is at 900 might be only having 50 shares. So what we will do is we'll pick up 50 from here and 50 from here, and then give the customer the average price of it, and the buyer can buy 100 HDB shares. So we will basically from here, we will move this 100 shares and then again 100 shares across and directly transfer. In our case, when it comes to wealthy, there are 2-3 ways of intermediaries there. Some intermediaries keep it in their demat account, which is a intermediary demat account, and transfer it to the customer. The 100 shares would be transferred. So, but in our case, what we do is we don't keep it in our demat. We directly transfer right from the seller to the buyer's demat account. So here is the seller who is there. So we will give the bank instructions of the demat account to the sellers, and the sellers would. Now, whom do we literally typically go and buy from? Very importantly, we don't buy from the banks normally, because when does it come to banks are the last people when anybody goes to, because banks, whatever is pledged shares with the bank basically means that it was pledged for a reason, which is for raising capital for it was given as a security, as a collateral against certain other borrowings that would have happened with the company. And if bank is selling is, that means the collateral is come to market, which means that previous debt is not honored. If that company is not honored the debt, it doesn't make any sense for us to buy that particular company at all. So generally, very few companies, quality companies don't come through banks, but majoritively it will come from private equity people. So this private equity people, let's say we will go and buy this particular from private equity, we negotiate a price, and that price is passed on to the buyer. So we directly do that. So how do we protect the interest of these buyers? Because the risk, that biggest risk that comes in unlisted market is non-deliverability. Basically, what I mean to say by non-deliverability is that let's assume this guy said that I want to sell it at 900 rupees. He's got 100 shares, let's presume, and customer is okay. Customer transfers. Let's say he will have to transfer 100 into 900. That is 90,000 rupees. He will transfer from here to the customer. But tomorrow, if this guy fails to transfer shares to the customer account, then the customer is stuck with this particular payment that is already done. So he may or he may not recover. Sometimes that's the biggest risk. There are a lot of issues that do happen in the market, especially in the unlisted market, because this is not so much regulated as much as the regular listed market is. So we need to be very, very careful. And that's how intermediaries like us, wealthy, play a very key role in the customer's interest. Now, what do? Is that we take the money from the buyer, let's say 90,000 rupees. The payment would happen here to the customer to one escrow account, which is like a temporary account that we uh, create for that particular customer. Whenever you guys make the payment into that investment account, the money will come and lie in that particular escrow account, and we will go and cite this escrow account to the private equity person. And even before we going and telling this particular seller that I need 100, we will go and block this 100 shares at a fixed price, whatever is the price. So now if it's 950, we might say, okay, we might be able to negotiate a little better price. Sometimes it does, negotiation does work, or sometimes it doesn't, because market prices are normally fixed. So let's assume it is at 900 rupees that we got the best price at. And this 900 rupees, so we will showcase to the seller of the shares that this particular 90,000 rupees in our escrow account. Now, please go ahead and transfer this particular thing. So the transfer instructions, once these shares are transferred by the seller to the buyer's account, buyer's demat account, and that's when we'll get a confirmation from the client saying that yes, I have got the demat shares into my demat account, and then we will release this payment across to the seller. So this is how we protect the investor's interest, making sure that the customer is not suffering on his payment issues. So that's the way it functions. So largely, if you look at it, the payments are gradually transferred only after this confirmation. So this way, supposing if at all the seller fails, which doesn't happen in our case because we would have already pre-blocked this particular number of shares. But even let's assume there is a point in case, so let's say something like last week where Reliance Retail was there, and Reliance Retail Thursday we had the board meeting, and when the meeting happened, just on that particular day, we saw a 50 rupees surge that happened in this particular shares just by Friday and Thursday. So in such a case, what happens is that the client might say, no, I was willing to sell it at 900 rupees, but I want now 950 rupees. But we can't go back to the customer and say, no, prices changed from 900 to 950. So what we do is we keep a little buffer beforehand. We know the price changes, and then we block it at a particular price. Once we have blocked it from the seller is obliged to sell it at the same price, irrespective of the change that happens in the next couple of days. So that's how we do our trades. So that's how we protect investors' money. And if at all this has failed, let's assume that a rare case scenario, there is a situation if this particular payment did fail, then what happens is that this whole money capital is given back to the buyer without any interest or without any charges to the customer. Uh, so this is how we deal with customers' money, and this is how we protect their investments across. Largely, this is how demat trades, unlisted trades do happen for the customer. Now, what kind of shares are available in this particular market? There are quite a lot of shares. I think if you look at it, largely I find about 200, 300 shares which are there, which are traded on a day-to-day basis. But this doesn't mean that all of them are good shares. Some of them are mediocre shares. Some of them are good shares. Some of them are shares which are almost coming to a IPO. So what happens is the price actually goes back and gets into a point. Supposing, let's say this is was trading at 1,200 rupees and the IPO price becomes 1,900 rupees. Just before the IPO, almost the price will keep moving and come very close to the IPO price. So that's, at this point in time, doesn't make any sense to buy just before the IPO. So it's the best way to do it is 1 or 2 years prior to the IPO. And that's when you can unlock the best valuations for this. So each, how is this priced? Typically, they are either 10 rupee shares or 100 rupee shares. 99% of the time, they are 10 rupee shares. And the price values would be done. But when it comes to IPO, it might come at 10 rupee per share, or it can be a 2 rupee share, or it can be a 5 rupee share, depending on what the management wants to do. So this is how it comes in. I'll give you an example. Classic example was something that we did with Reliance Retail. So Reliance Retail, I keep giving this example as a classic example. So Reliance Retail, I think almost about last October, when we started selling this, it was trading at almost about 800, 850 when we almost approximate 850 prices that we started recommending. Before that also, it was almost around 550. But 550 level, not many buyers were there. People also were not confident on Reliance shares at that point in time. Even the Reliance Industries itself was not very actively traded in the market. So from there on, today, if you look at it, any customer who had bought it during that point in time at 850, today the price is almost closer to 1,500 rupees. So the largest gain that would have happened to this particular customer for in a matter of 1 year is almost 650 rupees per share, which means a total price value of about 70, uh, almost 70% gains that the customer made just a matter of 1 year. Now, does it mean that if somebody buys in today at 1,500 rupees, will he make a similar kind of a gain? Possibly no. It could be maybe lesser than that, but so what could happen is that 76% is a phenomenal gain. Let's not even anticipate that. It doesn't happen with every share. Reliance Retail was only a classic story, right? Otherwise, a client, because it is a risk that customer is taking, so we can presume and safely say that customer should make about 25 to 30% kind of a gains from these kind of investments, which is a fair, decent investments across, provided he's not got it at a very high markup price. And now, what we do is, when we give you a share price, we will give you an indication that this is the share price that you can sell it at. But as wealth managers, you can go and sell it at any price that you like. Supposing you don't want to sell it at 1,200, you want to sell it at 1,210. So typically 10 rupees higher than that, we will still allow you to do that. But if you want to go and sell it at 1,500 rupees, we would probably limit you from doing that, because it is undue interest, because client will not make so much money eventually, or sometimes, like in a Reliance case, it could happen, it could be a 1 month forward price, right? 2,200 to 1,500 rupees just jumped in 1 month. But not necessarily, it doesn't happen with every share. So you look at one more classic story, which is Paytm. Okay, for almost, if you ask me, as far as I have seen, for 2 years, or close to 1.5 years, the price always remained around 1,500 rupees for that particular share. It's only now from last week, when after this Paytm guys announced that they're going to make a Play Store of their own, like how Google Play Store is there, right? So they're going to make their own Play Store, which is a mini market place of their own. So when that happened, then suddenly we saw a surge back again in that particular share. So probably in the next coming months, the shares might go upwards. So it is news driven, again, like what happens in IPO market or the listed market. This is completely news driven. So whenever there's some good news which comes up, sometimes there's a bad news, the price can come down as well. Sometimes there are some risky shares, sometimes there are good shares. So, but what we do at Wealthy is that we recommend only few shares which you can go to customers for. Largely, if you look at it, what is being recommended today from our end is HDB Financials, which is a HDFC group company. Then we also are recommending Hero FinCorp, which is again a Hero company, which is into two-wheeler loans. HDB Financial is one more group company of HDFC Limited or HDFC Bank, which is the last two remaining companies which are not got listed. One is HDFC Securities and one is HDFC Financial, HDB Financials. HDB Financial is a distribution arm, and they also solicit. Initially, they started as only loan soliciting company, but today they also sell insurance and all other third-party products as well. So that's one more company which. But the news that why this particular share has been quite active in the news is because regulator RBI has been restricting people from selling third-party products within the house. So HDB might become the most biggest avenue for them to start selling these third-party products. So that's why HDB Financial has become a good opportunity. Hero FinCorp is because the number of vehicle sales that has gone up. So that's what has changed. The two-wheeler loans will all come. Banks have stopped funding two-wheelers. So this has become a very smart space to work upon. Bajaj Finance is already there, which is a listed company, which is also in the similar space out there. Then we also, Reliance Retail, though we're not very pushy about it, but if client wants it, you can still give this Reliance Retail across. Merino is one more recommendation that we're doing. Merino is into it's not plywood, but this is into interior accessories, which they do a lot of accessories around interiors like the veneer decolumns, which gets overlapped onto furniture. So that comes from Merino, and Merino has multiple brands across. So that is another option that you can go to. So these are those typically 4 or 5 options which we give you to go to. You can also look at Stud. Stud is a they're not the number one, but they're number two or number three helmet manufacturing company in the country. Probably the most largest sold one is from a company called Vega, which is the highest selling helmets in the country today. But what happens is Vega is not there in the unlisted market, and Stud also focuses on a premium weight, helmets. So because it is premium, generally not it is not sold as much as Vega sales are happening. But this is not only that business they have; they are also into other, basically other medical equipments like PPE kits. If you see that face shield which came up after the corona epidemic, they quickly moved on to this because it was an allied business. What is there in the helmet business? So they started manufacturing face shields across, and they have been very successfully selling that, and that's why Stud prices went up after COVID situation happened. So these are a couple of stocks which you can go to market and talk to customers about. So this is how these are those couple of shares which you can recommend. So I think I'll leave this discussion here. If you have any kind of queries or anything that I can answer, I'll be happy to answer.
Hi, Leo this side.
Hi,
I had
Leo.
a query.
Ah,
So, is there any lock-in for these kind of shares,
yeah,
unlisted
good.
shares? Like,
Thank you
yeah,
for raising it up. If the IPO has not happened yet, there is no lock-in. So before the IPO, till that time there is no lock-in. You can go and buy and sell it in the secondary market, in the market, unlike anything, and then you can sell it off, not a problem. But if the IPO happens after the IPO, 1 year lock-in will be there. This is the current law. It could change from it changes from time to time. So if you look at it, sometimes earlier, about if you literally look at it, um 1.5, 2 years ago, it was 6 months. Then the regulator changed it to this one. Prior to that, there was no lock-in at all. So tomorrow, if the regulator comes up and says that even after IPO, you can go ahead and sell it, it can be there will be no lock-in. But otherwise, in the current rule of things, it is 1 year lock-in after the IPO. Before the IPO,
okay. So the buyer, right?
nil. Yeah.
So
So
the
you can
buyer, actually, what's interesting about these is if we buy it 2 years before the IPO and after the IPO, we can get a reasonably good price. But then if
yes.
there's a 1 year lock-in, then the price might decrease back.
May or may not. That's why we don't
Yeah,
recommend those, regular companies, right? We generally
right.
stick to those good names, which customers eventually will make money, and these are good brands. Like I told you, there are 200, 300 types of shares which are traded. Some of them are not even known companies, so customer might not get a market to that extent onto that. But we've seen that if you look at the previous 2, 3 IPOs that happened in the market, right? Despite not having so many
Right.
brands, also then these companies manage to get 9x, 10x valuations. So
Okay.
we don't know it
I had
because
one more question.
hmm,
So, like, so does Wealthy add a commission to the price which the seller is selling to make the gains
yes,
for itself?
yes. So when we give it to you, we will tell you. Supposing let's assume 1,200 is the price, and is the market cost price rather, not the market price. Then we will tell you that this is the market price that you can approximately sell it at. So let's assume this is 1,400. I'm just giving you a random number. Then what happens is we put it as that DWM margin, which is your margin, which could be something like this. So So it will say that it is 1,200 rupees will become a margin. Now, if you sell this for 1,300 rupees, your margin will become 100 rupees. So if you sell it for 1,500, then your margin will become 300 rupees. But generally, we don't recommend an overshooting price. You can will limit ask you to limit yourself in a 6 to 7% margin. 6 to 7% itself is a great margin to operate between, because let's assume this is a 1,200 worth things, and if a client is buying 1,000 shares, right? So client will pay 12 lakh rupees. For 12 lakh rupees, your revenue will almost be like 3 lakh rupees, right? So that's a huge margin, 3 lakh rupees in single trade, right? So that's why we will not ask you to sell it at that high margins, but I'm just saying. So even if you manage, you sell, if depending on how much quantity that it is sold at, even if you, sorry, even if you sell this at 1,250 also, you will still make 50,000 rupees on that particular trade.
Right.
And this is how many of the DWMs have been making good amount of. In fact, there have been a couple of guys who purely corely focus upon unlisted only, and they've been making 1 lakh, 2 lakh from unlisted itself. Yeah, one more point which I forgot. Thank you for asking this. It reminded me of one thing. How much should 1% have? How much can an unlisted shares 1% have? I would suggest that only 10% of the portfolio can be a good combination. Could be the good thing to have it in unlisted, because unlisteds are locked in. We'll not be able to give them liquidity that very fast as while buying, yes, one part of it, but while selling, it's not that very easy till the IPO happens and till the listing happens. So not more than, if at best you can go up to 15% of the portfolio. If the customer has 1 crore portfolio, you can give him up to 15 lakhs of unlisted, not literally more than that. Now, one more point which also I missed out. What are the requirements, documentations that will be
Uh,
required?
just a quick question. So this is for buying, and there'll be margin for selling too.
You can see at now at present, since we don't take the shares in our demat account, there is no selling option with Wealthy right now. So the only option when after client buys it, the best exit for him is after the IPO. Literally, but eventually, yes, we will. I think now we've been there have been lot of demand which has come up in the recent past. That especially we did this 1 or 2 trades with Reliance Retail itself, where we will give an option to customers to sell it off as well. But this is not a routine practice. If at all your client has something, we will. But yes, in the selling price also, let's assume the market price is same 1,300 rupees. What we will tell the customer is that you will be selling it at 1,250. So you will make 50 rupees margin from that also. So both ways you can make money. When you buy and when you sell also you can make money. But for now, we don't have a selling proposition, or rather, for the customers to sell it back directly. Eventually, we will add that, I think, because what we did with Reliance is that those customers whom we had sold it in the initial phases at 900, 850 levels, they all came back now at 1,500. They wanted to sell it. So what we did is, if there was another customer, so this we only did it within Wealthy only. If there was somebody else who had come and wanted to buy it at 1,500, so we asked this customer to transfer his shares to this customer. So that's how we did those trades. But that's uh, you know not a routine stock. We just did a couple of cases because client wanted some exits, and we did that because there was one customer who was literally sitting on 15,000 shares. And we had and I think he got it at a much better price. He must have got about 800 or 820 types. So he made a big amount of killing from that returns in 1 year. So he wanted to sell off. So he sold 50% of his shares. So we helped him to get an exit. Uh, Okay, so let me just summarize the documentation part of it. Documentation is very simple. We require a PAN card copy, uh, and the customer's demat account details. This is to transfer to That particular demat is mandatory. These are the only two documents that are required. Okay, Bharat, you had something to ask. Hi, Bharat.
Hello.
Hi.
Yeah, can you hear me?
Yeah, I can hear you.
Hello.
Yeah, Bharat.
Yeah, just wanted to ask, what is there any minimum quantity to deal with unlisted?
Nothing like it. You can buy any quantity, but generally we say 50 shares is a good amount of a quantity to deal with, because sometimes what happens is some shares are too very low on that, so we ask the customers to buy more, but there is no minimum quantity.
Because why did I ask this question? Because I'm completely new in this segment. So just some of my known, he asked me, I can't invest more than 10,000 at present. So suggest me where to put in, and the time period is for maximum for 3 to 4 months. That's why I asked.
Three
Can
to
I
four
suggest him?
months,
Yeah.
no, 3 to 4 months don't suggest, yeah, because what happens is the price momentum might not even happen in 3 to 4 months. See, most of the results are quarterly results, so till the next results, if the see, if, I'll give you classic example is stud, right? Stud in a matter of just 2 3 days itself, we saw good sharp bounce that happened at stud. Okay, that's because the people were expecting this particular company to grow at almost 32 odd percent, but that company gave a fantastic balance sheet report of 75% growth, and that's why the share price went up. But that happened because of few cases, like Reliance started getting funding left, right, and center across the globe, so that share went up. But there are a couple of others, like I told you about Paytm. Paytm for almost 1 year was of no interest in the market. So 3 to 4 months, avoid. 3 to 4 months, you stick to short-term debt funds or something like that, which is much better for in the customer interest. Here, if the customer is willing to come in for 1 to 2 years, 3 years, uh, this is a good option.
Okay, so you're not recommending in this case for 3 to 4 months,
And
right?
3 to 4 months, please don't do it. Please don't do it. Otherwise, if somebody, if it's a good share, and if even if the customer says that I want to just buy for 20,000-30,000 rupees also, not a problem. We'll accommodate that. Though 50 shares are the minimum thing. Let's say there is a share, if it is at trading at 250 rupees, and if the customer says I want to buy 1,000 shares of this, we can still okay, even if it's may not be the minimum quantity in some cases, we're still okay with that. Not 1,000, he will have 100, right? Sorry, my mistake. So we can still give him that for 25,000 rupees also, not a problem. But viewpoint has to be 2 years at least.
Okay.
Yeah, I had something in the chat box. Let me see.
So for these unlisted, you're suggesting a time period of at least for 1 year, right?
At least 1 year, yes.
And right now we have this option, what you mentioned.
There are a lot many more shares. We'll give you the more ones. These are those top ones that we have been recommending to you.
Okay.
Yeah. In fact, sometimes customers themselves come back and ask us that I want to buy this company's shares.
So can I suggest what already I told you what is the scenario? So which product I'll suggest him?
For that customer, best is to stick to short-term debt funds because it's 3 month, right? So short-term debt fund is the best option.
Yeah, 3 to 4 months, and right now he can't invest more than 10,000.
What if then it's okay. The short-term debt fund is still okay, not a problem.
So we are dealing in short-term debt funds.
Yes, we do have a debt portfolio. Right on your dashboard itself, you can pick up a debt portfolio and add it.
Okay, and for that even he needs a demat account, right?
No, no. For mutual funds, you don't need a demat account.
Okay, sorry, that is a short-term
Yeah,
debt.
yeah, debt. It's a mutual
For
fund. Yeah.
unlisted, unlisted is mandatory. He should have
Yes.
a demat account. Okay.
Okay, Mahesh, what is the transaction process? I will explain it to you again quickly. Basically, how we do that is that if I'll come back here. Okay, if there is a customer of yours who wants to buy, let's say this is Mahesh's client, and he wants to buy, let's say for 10 lakh rupees. Let's say which share? Let's say he wants to buy Mohan McCain at 180 rupees. Okay, so and if he wants to buy Mohan McCain at 180 rupees, so
Hi, Chandan.
basically, just a second,
Chandan,
let
hi.
me just complete it because I'm just answering a question from the chat
Yeah.
box. Okay, so if he wants to buy 10 lakh shares at 180 rupees price, so how many shares will he get? He will get approximately 555. Okay, so he will transfer 10 lakh rupees across, and these many shares. So what we do is when the money, what you will have to do is you will have to make the payment to the using the payment link. This will be the actual amount that you have to do. So let's assume I will just make this as 5555 shares. So you will have to make an actual payment of into 180, which is 9,99,900 rupees payment you will have to do. And along with that, you will have to mail us two things. One is the PAN copy of the customer, and second thing is the DMAT statement. Once you send us these two, PAN copy is basic KYC and DMAT statement is for transferring into that particular account. What we will do is before this, you can actually block the shares. You can tell them that, this is the number of shares that you want to buy. Your RM will block the shares for you. And once the shares are blocked, you can make the payment on a second day or whenever we ask you to make the payment. Then these two documents, you need to send it across. Then our seller, whoever is the seller, will transfer 5555 shares to the customer's DMAT account. When this is done, we will wait for a confirmation from your end. You can check, this will be done, this takes about 2 or 3 days. And once you give us a confirmation that the DMAT shares have been credited across to customer account, this payment or whatever you had made will get transferred to the seller. So this is how the process works. Okay, hope I've answered your question, Mahesh.
No, actually, my question was the transition process from unlisted to listed, like
Okay.
after the IPO, the transition process.
Okay, sorry, I read it wrong then. So what happens is typically it is normal. The company will go for an IPO. When the company goes for an IPO, the listing will happen. Most of the times, the ISIN number will not change. The same ISIN number which was before in the unlisted market will continue to be the same ISIN number after the IPO also. So nothing much has to be done. In the DMAT account of the customer, it will start showing the live trade prices. Till that time, it will show the book value of the share. No, there's no transition. Customer does not have to do anything after the IPO. Okay. In some cases, if the ISIN number is changed, then the ISIN number automatically is changed by the DMAT services. But 99% earlier it used to happen. Now, thanks to technology, the ISIN continues to be the same. Okay. I'm sorry, I interrupted someone who was asking a question. Let me take it up. Sorry, I don't really. Okay, okay. Let me take up question from the chat box before you ask them. Does capital gain tax work? Yes, capital gain taxation is there. Here, up to 2 years, it's short-term capital gain, and after 2 years, it is long-term capital gain for unlisted. Then it will get added to your other income and will be taxed at a marginal rate. There is no capital gain there, but after it gets listed, you will be you don't have to.
Sorry, Chandan.
Yeah. Yes, please.
Chandan, the question I had was, say, in order to calculate the capital gains, you need to provide the purchasing price and the selling price. Suppose a
Yes.
customer is buying it through Wealthy, what
Hmm.
record or the receipt does he have to show that he
Okay.
purchased so and
So
so stock for so and so
we will.
price?
Okay, we'll give a there'll be one receipt which will be automatically mailed to the customer. It's like a small statement of transaction, so which will say that this is the purchase price of the customer, and that he can while filing taxes he can show that as his purchase price, and whatever price he sold it off. Suppose let's say after 2 years he sells it off in the pre-IPO market itself for a let's say double the price, so he will show that as his capital gain and pays the tax on that. So we will give him a acknowledgement receipt will be coming to his account automatically once the payment and the shares get transferred. He'll get a statement for that.
Thank you.
Priya, do we have NSC? NSC shares are something called as ROFL shares. I'll not complicate the discussion here, but basically here this has to be bought directly from the promoter. It takes about 2 months for us to fetch that particular shares. So we'll have to apply for this particular thing from the promoter. In the board meeting, the promoter will approve or disapprove it. So it's a separate process. It's a slightly long process where we have to give an application and why we are buying it and how much shares we are buying it. So they will say that this is the reason and all that. So then we can buy it for, and NSC definitely can be bought, but it's a 2-month process. Himanshu, no, it cannot be done through the app because we need to block that particular trade and we need to do a transactions around it. So this is not given as an online feature on the app. So intentionally we've not added that. You'll have to discuss, but payment can be done through the app. Not a problem. But before doing the transaction, you need to give us a heads up offline.
If
Okay.
DVMs buy the shares themselves, will we get the margin benefit in the price?
Which one? Sorry.
If the wealth managers decide to buy the listed
Okay. So
unlisted,
then
yeah.
in that case, I would suggest you not to use the margin. In that case, you sacrifice the margin because why? I'll tell you. Supposing you're buying it for let's say 5 lakh rupees. Okay, and let's say this is a share is of 100 rupees, and your margin is let's say 6 rupees. Okay, so the actual price becomes 100 minus 6, which is 94 rupees. So if you buy it at 100 rupees yourself, what will happen is you will get this 6 rupees as your incentive, but there
Okay.
will be a TDS on this, right? Because every income
Okay.
that is paid to you will be having a TDS. So that
Mhm.
means basically on your own money, which you made the payment to the seller, you're getting your own money back and you're paying tax on that particular
Right.
income. So,
Right.
so what you do is in that, if you're buying it for yourself, you sacrifice that 6 rupees and buy it at 94 rupees only.
Right.
Okay, Leo. Any other questions? I guess there are no more questions. I saw some hands being raised. Let me just see. I think, yeah, it's done. So, okay, fair. Okay, good guys. I hope I've given you some more clarity on this. In case you have any more doubts or anything like that, you can get in touch with us. We'll help you out and we will give you more clarity on this. Okay, thank you very much. See you.
Thanks.
Bye.